Hello traders, welcome back to Explain the Charts. Today we are going to take a look at the USDCHF pair, discussing both the recent news surrounding the pair, as well as diving deep into the chart data to make sense of what's going on and try to predict what's to come. Let's begin by looking at the news. Recent Google searches surrounding USDCHF have revealed that there's significant interest in what the future holds for this pair. The key questions are, what is the prediction for USDCHF? Why is USDCHF falling? Is USDCHF bearish? And what is the USDCHF market today? These questions suggest a heightened level of concern about the pair's direction. Many articles are reporting that USDCHF is still holding in range above 0.8399 despite today's decline. The Swiss National Bank, the central bank of Switzerland, has recently taken a more cautious approach to monetary policy. This is due to a slowdown in inflation and a strong Swiss franc. There's a sense that USDCHF remains subdued around 0.8450, with analysts focusing on U.S. economic data and the likelihood of an aggressive Fed rate cut. The U.S. dollar has weakened against most major currencies recently, as investors prepare for the upcoming U.S. presidential election. The upcoming Fed and BOJ meetings are anticipated to provide directional guidance. Investors are also looking at gold's record high, fueled by expectations of a significant Federal Reserve rate cut at the upcoming policy meeting. WTI oil has rebounded from 4-month lows due to renewed expectations of a 50 bps Fed rate cut and supply closures from Hurricane Francine. The news is definitely mixed and suggests a lot of uncertainty in the market, but what can we glean from the charts? Now let's take a closer look at the daily chart. We can see a range-bound price action on the daily chart, with the pair moving between a support level around 0.8650 and a resistance level around 0.8950. This suggests that the market is currently undecided about the pair's direction. However, when we zoom in on the last month, we can see a slight upward trend, indicating a potential shift in sentiment toward a bullish stance. Zooming in even further on the last week, we can see that the pair has been testing the upper range of this channel. This could be seen as a bullish sign, as it indicates that the bulls are pushing the price higher. This range-bound behavior is even more apparent when we look at the 1-hour chart. If we look at the last 24 hours, we can see that the pair has been consolidating around the 0.8450 level. This suggests that the market is waiting for a catalyst to break out of this range. We need to be aware of potential upcoming news events that could shift the market in either direction. To get a clearer picture of the shorter-term outlook, let's look at the 15-minute chart. Looking at the last hour, we can see that the pair has been trading in a very tight range. This suggests that the market is still undecided about the pair's direction in the short term. We're still waiting for a catalyst to break out of this range. The fact that the pair has been consolidating around the 0.8450 level on all time frames suggests that this level is significant and could be crucial in determining the future direction of the pair. If the pair breaks above 0.8450, we could see a bullish breakout, potentially reaching the resistance level of 0.8550. However, if the pair breaks below 0.8450, we could see a bearish breakout, potentially reaching the support level of 0.8350. To recap, there are a few important price levels to watch out for. The 0.8450 level seems to be a significant level of support and resistance, and breaking through it could be a major catalyst. If the pair breaks above 0.8450, the next target is the resistance level around 0.8550, and if the pair breaks below 0.8450, the next target is the support level around 0.8350. Upcoming news events could be major catalysts in deciding the direction of the pair. It's crucial to pay attention to the news, the overall market sentiment, and the price action on all time frames to make informed trading decisions. However, as with all market analysis, predictions are not guarantees. There are several factors that could affect the pair's trajectory, including unexpected economic data releases, geopolitical events, and shifts in risk appetite. It's vital to remain flexible in your trading approach and adjust your strategy as needed. Remember, managing your risk is crucial in any market. Don't invest more than you can afford to lose, and always use stop-loss orders to limit your potential losses.